Scott Bauer, the CEO of Prosper Trading Academy, joins us to talk financial markets. And, well, Scott, welcome. No numbers at the bottom of the hour for us to break down. I want to get your thoughts on some of the data still to come this week. Obviously, the focus being the jobs report on Friday. But earlier in the show, we were talking about crude stuck in a range between 77 and 65. We've got a similar situation with the U.S. dollar, very much range-bound as well.
Very much range-bound, but also very top-heavy, which I think the big surprise there, Ben, was traders, investors really looking for the Fed last week to be way much hawkish, I guess. Mm-hmm. Far more hawkish than they actually were. So we saw that run up, and it could not break that magic, let's call it 93 and a half level that we saw. So we're seeing the dollar stuck in that range now. But if anything, Ben, I think the concern for the dollar, I think the trajectory of the dollar could be to the downside, because maybe traders are going to get unexpectedly surprised at Jackson Hole if the Fed is not as hawkish as many believe they're going to be.
I like that, Scott, because there's been a lot of lead up into this fall, Jackson Hole, the next meeting ultimately, and how we could hear about some tapering. Now, I do want to also get your thoughts on the RBA, because they actually did decide to taper, I think $5 billion to $4 billion. We'll get you some thoughts on that. We mentioned that at the top of the show as well. But in terms of the Fed and not as hawkish as you mentioned, we do have some speakers this week as that gag order gets released, and they can start to kind of give some thoughts. And it seems like that's where the dollar found some support with some of these individual speakers saying, hey, look, it's time, or we're going to have to move the pace up a little bit sooner rather than later.
It did, absolutely. But again, the fact that it could not break through that, 93 quarter area, that's tough. So we do have some support here, but it would not surprise me to see a run down maybe towards 90, Ben. And I know that's a massive move from here. But if over the next couple of weeks, some of the economic data continues to be, maybe weak isn't the right word, but less strong, right? Not as strong as they have been, we could really see some pressure on the dollar here. But, you just mentioned the RBA and also in New Zealand. Those are the biggest gainers versus the dollar. Both of their central banks still looking for ways to tighten their monetary policy, even with, unfortunate breakouts of the Delta variant here. But those are strong as could be right now.
Okay, we'll take a look at those in just a second here. In terms of the RBA, again, as mentioned, next month they're going to cut those purchases from $5 billion to $4 billion. Scott, I wanted to just talk a little bit about the economic data in terms of, obviously the jobs is the major focal point. We heard from the Fed. It seems to be the missing link in the chain right now, or the piece in the puzzle, as far as getting them kind of over that hump as far as changing some of the language or expectations. It seems like you mentioned, if not as strong as expected, it could weigh on the dollar. But then there's a flip side of that. If this number comes in really strong and indicates that somehow that this missing piece of the puzzle is now sort of falling into place, or we found it, so to say, then ultimately this could be, it could accelerate things a little bit, language and potentially price activity as a reflection of expectations.
It could, but I think the lowest hanging fruit, if you will, of the Fed response and quite frankly of the market responses, even if we get a real hot number here, we still have Powell and we still have them saying it's not time yet. That this is, we're still in this period where things are maybe getting a bit weaker. And I know the jobs number on Friday is the big one, but just look at the most recent pieces of news, and we always talk about this, one report does not make an outlook here, but look at the core personal consumption that we saw on Friday. It was a hot number but slightly lower than expected. So has inflation peaked? No, it definitely has not peaked, but maybe it's showing a decline in growth here. ISM manufacturing yesterday slowed for the second straight month. So there definitely are signs here of some slowing, but I don't think anybody really thinks inflation has peaked.
We've got the 6A on the left, the 6N on the right. You mentioned some of the strength there. We can see that in terms of price activity. The Aussie dollar, we looked at the top of the show, how it firmed overnight, up by 1/3% still in reaction to the RBA news, a little bit unexpected. Here's a look at the dollar, Scott. I just wanted to point out that, well, in terms of right now, the dollar recently finding some support right around this 89, this 90 even level. Yep. Again, here's the 93.50, the next hurdle for it to get up above. But here's, range bound within this smaller area, which is part of a larger degree area that we've been in over the last 7 years. I just wanted to point that out. Scott, Bitcoin, what's going on, the latest there? Because it seemed like the dip into that 30,000 level found some support. And speaking of range bound, you've got the dollar we just looked at. You've got crypto right now finding comfort and very limited in terms of directional conviction one way or the other at this point. It seems to be forming a bit of a value zone in itself.
Limited, I think, is the perfect way to describe it. We made that run up towards 40,000. Everybody thought that, oh, here we go, 50,000's on the docket now, and we've come off of that, which is good. That's good that we've come off of that 40 and a half, and 38 is a substantial number. We're trading what, 38.2 or so right now. 38 is this now line of support, because for a while that had actually been a big area of resistance when Bitcoin was hovering 30, 32 and trying to make those rallies. So this is going to be, to me, one to really watch here. And if it can defend 38-ish, then another crack at 40 should be right around the corner.
Hey, while we're talking about a range-bound activity, I just want to pull up a chart because this one sort of, says it all in terms of what had been somewhat range-bound activity. Let's just zoom in on the 10-year and the 30-year. Range bound around 2.3, 2.4 for the 30-year. We're talking February, March, April, into the middle of May, and we've sort of lost some of that. We're seeing directional conviction here. In the 10-year, you can see, again, it was similar situation into the month of June, where it really started to open up the door to the downside. Scott, talk to me, because rates seem to have been leading to the downside amidst some of these COVID concerns. Obviously, jobs could slow some of this momentum or turn this around at this point, but they have yet to reject this lower level, certainly holding. It seems like they're waiting for more news, and certainly seems like they saw that meeting as somewhat hawkish and, well, as you mentioned, looking potentially for a less strong jobs report later this week.
I know my prior English teachers somewhere right now are just cringing at the way that I described that.
I didn't mean to bring it back.
No. I'm making fun of myself. But in terms of the 10-year here, man, it almost hit 115. I mean, that is just crazy, Ben, to think of where we were, this trajectory to the downside, with still the overbearing news that the Fed is going to start tapering. So is 115 going to hold? Are we going to go to 110, 105? I don't know, but man, if I was in the market to refinance a mortgage or get a new loan here, how could you not?
Definitely, it does seem like rate limbo in terms of the next catalyst there, Scott. I mean, what would tip the scales if we were to see some sort of continuation of further, concerns tied to the COVID? I mean, it seems like that's really ultimately, or is it, this global slowdown that's got investors concerned at this point?
I do think it is more global than it is here, quite frankly, because, even with the unfortunate events, it's really bad. We all kind of believe, not just from our emotional or psychological side, but fundamentally also that, we're not going to lock down again, or the likelihood of lockdowns are probably pretty small. However, globally here, other economies are doing much, much worse than we are. And I think that's what's really weighing on investors' minds right now. All
right. Something to keep an eye on. Scott, appreciate you joining us to talk currencies. Slipped in a little Bitcoin and English lesson here, or grammar. I guess it's English.
Yes.
Scott Bauer, the CEO of Prosper Trading Academy, joining us this morning here, this Tuesday morning, to talk some of the fundamentals behind some of the price activity. Let's dive